The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing daily routines and processes, building your headspace, your belief system, your mindset, and your daily habits to bulletproof yourself to master the markets. It's a free audio program. The links are in the description box below. They're both free downloads. Let's get started. G'day, trader Stacey Burke from Stacey Burke Trading. Congratulations on a fantastic week and a fantastic start to the month of December. Today we're going to be talking about pump and dump, dump and pump, this simple concept that I'm hunting for every week. The playbook is built on just simplicity. So before we get started, I really want to emphasize to traders again in every video, simplicity, reproducibility, and scalability. Hunting the same repeating setups that once they coil to explode in a parabolic manner are scalable in size, simple, repeatable, and scalable. And so when I'm looking for opportunities, I'm looking for the same setups every week on any instrument. We've talked about a basic weekly pump and dump template, regardless of the instruments. Signal days, markets closing in breakout, multiple days of breakouts, first red day, first green day, inside days, and of course low-hanging fruit if markets are already in breakouts and continuing to break out. And that can be in the long or the short direction. You know, the whole point of reproducing simple, repeatable setups is to remove myself out of the equation. I talk about self-sabotage all the time. Traders will do all kinds of things when they get behind closed doors. And that inconsistency, that random, impulsive, self-sabotaging, degenerative gambling type of behavior is why most traders will lose. A lot of traders have expertise and skills, but they do other things in between because they've got information overload. They're looking for blocks, sweeps, gaps, runs, hunts, draws, inversions, imbalances, premiums, discounts, arrays, etc. I'm just looking for a buy setup or a sell setup. What I don't want is garbage trading, 50-50. And so I emphasized to traders the importance of higher time frame levels. Markets only do 3 things, and when we start a new month, a new timing cycle, markets that violate the higher time frame levels, weekly or monthly levels, the reason why I look for that is because it increases my odds of success. Why is that? Because markets, once they break out of those levels, are either going to offer a trend continuation trade, whether it's in the long or short direction, or they're going to fail and offer a reversal setup in either direction, or they're in a higher time frame trading range. Now we've got 3 examples specifically of these templates that played out this week, and we'll go over those in a moment. But I want to emphasize something really simple to everybody. Signal days, daily time frame. I'm just looking at daily closing New York charts. Now this is what I'm really looking for every week. I'm looking for 3 days of breakout traders because I like to short markets. I'm looking for the pump and dump template. So what that means is on Monday morning, when everything starts the new week, I repeat this, everything starts from Friday's closing price, whether it's up or down. The market's either up 1% or 3% or down 2%, whatever. But on Monday, what I'm looking for is a market that gives me a signal. I want it to either break out of Friday's range, and we have day 1 breakouts, day 2 breakouts, day 3 breakouts, and I'm looking for this template every single week because I want the scalable pump and dump shorting opportunity. That's what I'm looking for. 3 higher closes for the dump. So we have traders trading long, they're chasing the trend, or they're getting in, they're getting out, but I'm looking for the reversal template. Now we can have this over 3 sessions. We can have this over 3 days. So when I get a market that closes in breakout, that breakout can continue to break out. It may have a subtle variation, but essentially this is all I'm looking for. I'm looking for the same scalable opportunity. So I'm always looking for markets that close and break out. Now the upside of this is that when these markets coil sideways into a timing window and we have no major red news, they're scalable and they're what I call ACB. And that's what I refer to as they ain't coming back, which means there's no stress, there's zero thinking, zero emotion, and for the most part, zero management. And when I get the larger template like this, they're hold till close in the majority of cases because they're not coming back. Because if they come back, That would allow traders who are on the wrong side of the trade to get out of a losing position. And the name of the game is to transfer the money from the many to the few. So I just want to start off with the first thing is I'm always looking for this template. I'm always looking for the same template. So when I get a market closing in breakout, this can be inside of a market that's already broken down and it's pumping back up into higher time frame selling. So sometimes traders have the misconception that they're always looking for something that breaks out on the high. This could be a market that's broken down. This can be a market that breaks out, but I want traders to read the top line. That's a weekly template. That's starting on Monday. These are all weekly templates. So for traders that are struggling or getting banged up, I keep saying over and over again, Monday's day 1, Tuesday's day 2, Wednesday's day 3. What type of template am I in on any instrument? But the first thing I want to see is a market close and breakout. So when I don't get this template, now I'm potentially looking at a market that may be setting up a different template. A first red day, it may be an inside day somewhere in here that offers me an inside day false break reversal. It may be a market that just continues to break out and go higher. It doesn't offer the ACB setup. It may be a market that's just in a higher time frame trading range going back and forth between the high and the low. And there may be a session A+ nail and bail. One of the questions I got from a trader yesterday is, why do I need to worry about it breaking higher time frame levels? And my response to that is this. You don't need to worry about any of that. If that's what you want to do because you're a scalper, you can do whatever you want. This is what I'm doing. But if you want to increase your odds of success and size, focus on the days and the setups where it's really easy to make a lot of money. So let me repeat, that's the template that I'm always looking for. And in between, if it's not setting up like that, I could be in a first red day template. There may be markets that break out short, giving a first green day, but it may be a pump day for a dump, a follow-through, an all-in follow-through opportunity. This is a great example of it. Exactly that. A market that breaks out, closing breakout short, gives me a pump day. We get a signal on the day for the all-in collapse, the all-in ACB. It's not coming back. And when we have these type of opportunities, this is where traders can significantly compound their trading account. A different variation of a market that closed in breakout short, it pumps back up against the breakout into higher time frame selling for the all-in collapse, the dump, the pump, coil, and dump. So when I say to traders, I'm not worried about movement. If you want to scalp in and out or do anything, of your own volition, that's entirely up to the trader. That's why it's called discretionary trading. But I'm talking about the same repeating templates. And when this template doesn't evolve, do I have any other templates that have now set up that can identify a parabolic setup in my New York session and sometimes Asia? We'll look at an example of that. From the metals, I like to look for Asia opportunities on gold every single week, at least 1 or 2. 2 to 3 scalable opportunities can significantly compound your trading account, especially when they're coiled to explode. Now let's look at a first example of this. We had Monday, day 1, new month, breaking out of the high of month level. Now at the end of the month, we had a market that closed in breakout. So we've got a couple of templates. I did a video on this last week, and I said go through the close on Friday of all the charts to find instruments that closed in breakout at the end of the month. Traders have all this information available to them. Silver closed in breakout. It broke out again. Gave an inside day on Tuesday, a higher close. Remember what I said. Go back, draw the high and low of the first trading day of an instrument. Markets that have broken out of higher time frame levels when these new months start. We had 1, 2, 3 higher closes. 3 days in breakout outside of the high of month level. We had an inside day. Really simple concept is that if inside day traders are triggered into the markets, and we have a market that has now done one of 3 things that all markets continue to do. They break out, they continue to trend, they break out, they reverse. Do we have a reversal setup? An inside day false break reversal setup. We have signal days and we have another signal day. We went over this yesterday, but just to reinforce some simplicity, we have the high of month level breaking out and reversing on our inside day. We have closing price, the highest closing price of the month. 3 days of breakout traders in the market, and just a really simple, basic pump, coil, and dump heading into our Asian window. Asia session traders had the session nail and bail, timings, levels, behavior of price, major round numbers, and just the really basic visual conceptualization of 3 levels of rise. We have trap volume in the upper quarter for the parabolic collapse. The next important part is we have a signal on the day, and that is the breakout of our low of day level. That breakout now is either going to succeed or fail. We haven't taken out the low of the inside day level yet. And we had the very simple low-hanging fruit, which is the trend continuation trade. Page 96 in the playbook, a market that has broken out. It's trending now. Does that breakout succeed and continue to trend? If we're in a market breaking down, we want to see it pump up, coil, and dump in our New York window. And really simple again is we have a market that breaks out, pumps up. We have 3 levels of rise. We have trap volume. We have our London session highs. And we have our New York open parabolic collapse. Now, I want traders to go back through their charts so that they understand this. The same things happen again and again and again. It's the same things over and over and over again. Which instruments are giving us the signal days? Has the train left the station? Is there any low-hanging fruit left on the tree? And traders from the masterclass will understand you can only trade in one direction. The train had left the station, so we target the low-hanging fruit. Now, I made mention to traders, I'm looking for indexes once they break a higher time frame level at the beginning of a new month. So if you go back and just scroll through your instruments, we're looking at the NASDAQ. Anytime a market breaks out or it gives us a breakout in a previously defined range, and we can form a thesis, that's where trades have the highest probability of success. I'm not looking for buy and sells. I'm looking for the same repeating setup. So I am looking for the indexes once they've broken a level. So we break out at the end of the month. We already have our thesis in place, a market breaking down from inside, pumping up and dumping, pumping up and dumping, pumping up and dumping, until we reach the higher time frame level again on the opposite side of the range. Currently, I'm just not interested in the NASDAQ because we're inside. So just to differentiate movement from a repeating setup, I'm looking for the repeating setup, not catching a move. So the other instruments that were still inside were the Dow. A trader commented, well, the Dow gave the same signal as the Russell. Well, actually, no, it didn't. It did close and breakout, and so there's a session nail and bill potentially for traders if that's set up for them. But I'm saying that I'm waiting for this market to break a monthly level. That's what I'm waiting for because currently I'm still inside. So yes, we can have movement, but I'm looking for setups once markets break out. Once they break out, I have either a market that is potentially offering me a failed breakout reversal. If it's a trend trade setup and traders are looking for trend trade continuations, does that setup present? Market that breaks out, it pulls back, new month, new timing cycle, and explodes vertically in a higher time frame dump, coil, and pump setup. Currently, I'm inside, so I'm just quite happy to leave this market until it breaks a higher time frame level. Right, wrong is irrelevant to me. That's what I'm doing. Which brings us to the Russell. Now we had a market that closed in breakouts on Wednesday above the previous high of month level. So if you just look closely, you'll notice that November's high of month level was closed outside of. We had a market closing in breakout. That's a signal day. So I just talked about at the beginning of the video, I'm looking for 3 days of breakouts. Well, we didn't get that. We had day 1, day 2. On the downward direction, we might get a pump day. Oh, it's exploded though and closed in breakout at the high of month on Wednesday. How does this market set up into our timing window? And so I made mention on the post, we have higher time frame levels on the way up outside of our high of month level. This market may succeed in breaking out. How does it set up on the day? I've talked about this repeatedly in previous videos. This is Thursday. This is a day 2 template, a day 2 range expansion template, a market that closed in breakout. This is the only index that closed outside of a monthly level from the previous month. This is the only one. And it's a really simple understanding of signals on the day. We broke out again. We made higher highs. Higher highs in a market that is day 2 on the backside of the week. We got our rectangle. That's a consolidation. So we have a market that's in breakout. Markets are either going to fail and reverse, or they're going to stay in breakout, or they're going to chop back and forth in a trading range. Those are the only 3 things that markets do. It's got nothing to do with block sweeps, gaps, hunts, runs, arrays, premiums, discounts, draws, etc. They break out, they continue to trend, they break out, they fail and reverse, or they just bang back and forth between a high-low range, which we'll look at in a moment. This is the 1-minute chart, and I'm going to just repeat the same thing over and over again. It's got nothing to do with mastering a 1-minute chart. It has to do with sitting on your hands and waiting. We talk about the 10 a.m. club every single day. That's the beginning of a new 4-hour rotation. Now, I want traders to understand this is what I'm looking for. I'm not interested in trying to, I caught the high, it was a great short at the open. Or I caught the low, it was a great long at the open. I'm looking for the template, a day 2 template on Thursday, market that closed in breakout. Is this offering me the parabolic opportunity, long or short direction? Emphasizing dummy proofing it for myself so I can only trade in one direction. Traders from the masterclass. 10 a.m. club, scaling in, going to break even, and walking away. It's day 2. It's a hold till close opportunity. Clearing out higher time frame sellers from the previous monthly levels after closing in breakout. Markets only do 3 things. This was the signal day. Day 2 typically expands the range. But on this particular case, we're in a trend trade now on the front side of a new month. We're expanding the range in a new month on the back side of the week. A hold till close opportunity. The only index that closed outside of a monthly level. Now we'll look at something different here. We talked about the Japanese yen earlier this week. It closed in breakout in October. Closed in breakout at the end of the month. At the end of November. So I talked about earlier, just again, marking off instruments that were in breakout at the end of the month. Why is that? Because those breakouts might fail. So if we have a higher time frame opportunity, we may now be in a month. So we talked about marking off the very first day of instruments, because that can give traders an indication based on signal days when they break out of potentially being in a first green day monthly template, breakout, pullback, continuation, explosive continuations, midpoint range of the month. Are we getting reversals? Whatever. But that brings an instrument up on our watch list. We had the low-hanging fruit on Monday, day 1. That's the first trading day in a new month. Everything starts from the closing price of the month. Friday, we have a high-low, and we have a market that's in a trading range now that was breaking down. We had inside days, it broke down, pulled back, inside day, broke out again, got low-hanging fruit from the breakout. All the breakout traders that were long in November were stopped out or cleared out. Day 1, that's our high-low range now heading into the new month. We haven't broken a monthly boundary, but we have a market that's breaking down in a first red day trade template. It's collapsed back into the breakout that occurred in November. But does this offer any opportunities now on the backside of the week? I want traders to understand something. The reason why I am very particular about what I'm looking for is because I don't want to be doing anything. I have a lot of scar tissue from years of doing everything, and I'm just looking for the same repeating opportunities. I don't want to be in the market. I don't want to be chasing movement. I want opportunities that are going to explode and not come back and give me zero stress. So we have our opening range on Monday. We have a large range day. That was our low-hanging fruit day. There's our high-low in the new month. Tuesday, day 2, trades back up to the high of month level. The Monday, we're Friday's closing price. Everything starts from Friday's closing price. So we're minus whatever percent on day 1. Tuesday goes back to the high of the range. Wednesday breaks down below Tuesday's low of day level. Day 1 breakout traders in the market. Thursday breaks down again. Day 2 breakout traders in the market. Remember what I said right at the very beginning of the video. I'm looking for 3 days of breakout traders. And Friday, Day 3 on the back side of the week. Day 1, Day 2, Day 3. 2 types of trade opportunities. 3 days of breakout traders in the market at the low of month level. First of all, we have a signal day, a market that continues to break down into the breakout. We have 2 days of breakout traders in the market. How does price behave on Free Cash Friday? Simple, repeatable, and scalable. This is a 15-minute chart. And traders obviously can finesse a tighter entry and scale into this opportunity. 3 days of breakout traders. We have 3 levels of dump from our Asia session window. 25 to double zeros, 75 and 50, coiling sideways into our Europe-London Open for the explosive parabolic reversal on day 3. 2 types of trades, trend trades or reversal trades, with 3 days of breakout traders in the markets. Scalable, repeatable, simple, doing nothing, allowing the templates to set up. Now, gold was another instrument that gave us signals on the very first trading day of the month. We went over that trade earlier this week, Monday, Tuesday, 2 fantastic scalable parabolic opportunities. A reversal setup on day 1, Monday, the A+ session reversal, and then, of course, the parabolic low-hanging fruit explosion in New York on Tuesday. Now, I mentioned earlier in the other video that last month was an inside month. It traded inside of October. And so we have a market that's given us signals on the day, breaking out of the monthly high, day 2. And I mentioned to traders yesterday that gold was in a trading range. Everything starts from Friday's closing price. And we are currently trading sideways inside of Friday's range. Now, Friday was a breakout day. And if we just draw our breakout level across, traders can see that we are in a high-low trading range. So there are still opportunities within that, but I don't want to trade in the middle. So Monday broke out of Friday's range and made a new high of month level. Friday's closing price, a green line, just to keep a simple representation and so traders understand we're just in a higher time frame trading range. We have Friday's low of day level, we have Friday's high of day level, and we have Friday's closing price. It broke out on Monday, dumped back down inside, and we've been banging up into that high of day and closing price level. Heading into Free Cash Friday, we have a market that is inside of a trading range. On Thursday, we broke out of Wednesday's low of day level, and we made higher highs on Wednesday. Higher highs on Wednesday and dumping down. That market broke out of Wednesday's low of day level before pumping back up and making higher highs and the high of day level heading into Free Cash Friday. Now, with the current volatility, I've mentioned to traders I use major quarter levels, $25 boxes. And why is that? Because gold seems to like $25 boxes. We're heading into Free Cash Friday. We have our high of day level made in our US session. And we have a simple dump, coil, and pump template in our Asian window for the explosive parabolic reversal from major round numbers, 4,200, exploding back up to our quarter level. Now again, traders who are trading gold specifically, or they're hunting repeating patterns, again, I'm looking for major quarter levels to offer this setup. So a really simple concept for traders to understand is that our high of day level, whether we're going for the pump and dump or the dump and pump, that's where the setup begins. The high of day level was made in the US window. It dumps down into our major round numbers, coils sideways. Hour 1, hour 2, our third hour club. And you only can trade in one direction. The scalable parabolic Asia session reversal on Free Cash Friday. So traders need to understand sitting on their hands and waiting, knowing exactly what they're hunting for. Then when the setup presents, whether you're just entering, putting a stop in place and a take profit level, or you're scaling in, taking some off and getting paid, as I mentioned to a trader earlier this week, get paid. Get paid on every trade. If you're using smaller size, you can still break that into smaller portions, into thirds. 111, take some off, leave a trailer, take profit level, and leave a trailer. So you have the last third or the last quarter of your trade squeezing the maximum amount out of a winning setup. And all that is a dump, coil, and pump template. We went over this a couple of videos in the last few weeks on gold, especially for Asia session opportunities. I look for 1 or 2 of these a week. And major round numbers, this is a 250 pip box, a $25 box, no different than a currency pair being 25 pips. Scalable, reproducible, and simple. Dump, coil, and pump. There are only 2 trade setups, a buy low or a sell high setup. But there were fantastic opportunities this week for traders to compound their trading account, and in between, doing nothing else. So not worried about catching moves or grabbing the high or I caught this, I caught that. Where's the simple, repeatable, scalable setup? All markets only do 3 things: timings, levels, behavior of price. Which instruments are on your watch list? Which ones are setting up into your timing window for the parabolic opportunity? Because the same things happen again and again and again. Because all markets only ever do 3 things. Which instruments are offering me the best 90-10 playbook trading setups? Keep it simple, repeatable, and scalable, traders, and in between, don't engage in any random, impulsive, potentially self-sabotaging behavior. Once you're behind the closed doors at the keyboard, doing all kinds of crazy things. And how do I know that? Because I did that. And it's a daily battle to improve yourself, to make sure that your routines, your processes keep you out of potentially degenerative gambling type of behavior. One wrong move, you can go into tilt and blow up your whole trading account very quickly. You can undo months, maybe years of great work just by engaging in impulsive, random, impatient, degenerative behavior. I'm not looking for trades. I'm not taking trades. I'm looking for the same setups over and over and over again. Rinse and repeat, traders. Have a great day. Congratulations on a fantastic start to December. Keep it going and keep it growing. And may the markets go with you.